good morning, good morning. Looks like we got Dan and Gayton and Don, Brian, Cliff, Arturo, channel members, Nikki, Darren, Rex, and Goose in the house. Good to see everybody. How's it going? How's it going? Everybody have a good weekend, I hope. We had a birthday party for my youngest. And today's his birthday. So happy birthday, Jax. Anyway. Whew. See, I got all adult children now. He's well into the almost out of the teenage years. Anyway, glad to have everybody. He's he turned 18 last year, so anyway, glad. So, what else had a birthday? The bull market had a birthday. Bull market turned 2. Now, anybody in the chat know how long a typical bull market usually lasts? Anybody? Yeah, I'll give you a minute to guess on that one. You can let me know in the comments down below if I'm no longer live. And while you're at it, if you don't know how to chat on the stream, click the button over here. Be a subscriber on the channel. A few seconds later, you can chat with me while I'm live. And if I'm no longer live, you'll have to leave a comment down below. While you're doing all this, why don't you check out some of the other links. Go to the channel homepage down here and watch the market roadmap video. It's like my favorite indicator with some arrows and an orange line, and learn about that indicator if you're new here. And we'll be using that on every chart here today. So Jim got it. 5 years is the average bull market. So we're 2 years in, potential for 3 years left to go. But, people, this is the most pessimistic we've ever been at all-time highs. VIX is sitting at 20, and as we make all-time highs, and that I was reading statistics last night that we've had since like 1960, we've made 720 new all-time highs. This where we dipped and made a new all-time high, not just new all-time high like we did in the what was it, the 2010s or whatever, where it was like every day was just a grind, new highs every day. We're talking about where we dip and come back to it, and we've done it like 720 times since 1960, and like 100 of them, 102 of those have happened when VIX was greater than 20. So it's like a 14% of the time, 15%, something like that. And I'm rounding off all the numbers. So we're looking at, this isn't that rare of an event where we make all-time highs while VIX is elevated. So don't think that just because VIX is elevated that we can't continue higher. So that's one of those things that to keep in mind, causation and correlation. Well, for rallying to all-time highs, the VIX should be low. Except when it's not. So, take it with a grain of salt, I guess. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instruments out there. So no stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. I mean, every trade, there's a buyer, there's a seller, there's a winner, there's a loser. And which way those go, you tell me. And if you need somebody to tell you what buttons to push, what to do, what to get into, it's not what I'm doing. You need to hire and consult a financial advisor and make sure you trust them. Trust is a big thing in this game. Nobody's watching out for your money more than you are. I guarantee you. It doesn't matter how much you pay them. Nobody will care about your money more than you do. And if you don't care about your money, somebody else will make it into their money. So be careful out there. Today is a bank holiday in the United States, so probably a little bit of a lackluster day. We usually see lower volumes. Now, it doesn't mean something crazy won't happen. We've got lots of Fed members speaking out here today. And yeah. So there's on the I posted this on Discord. I wasn't swoofed enough to pop it up in the before I went live. Let me grab it really quickly out of Discord. Pop this open. Pull it out, drag it over. So we have the first big earnings week of the season here of this Q4. These are Q3 earnings here in Q4, and we'll do it all again in January. But we kind of started out with a few banks reporting earnings on Friday, and now we've got a few more coming out. A few more trickling in. We've got Citibank, Bank of America, PNC, U.S. Bank Corp. We had a few of them report on their First Horizon right there. We'll talk more about this one later on today. So there's a little teaser for you. We've got Discover Card and Pinnacle, just smattering here. Now, Netflix, one of the first, TSMC, Netflix, some of the first big tech companies coming out, reporting earnings, and we'll ramp it up even more next week. So remember, we kind of go financials. That's where it really kind of kicks off. It used to kick off with Alcoa, and Alcoa is still in here, but we really kick it off with financials. Money flows into financials ahead of those financial earnings, and then we see money flow out of financials into big tech. This is the quarterly cycle for earnings, and then we see money flow out of big tech and disperse into other things. And there's no one place where it really disperses to, but we see that constantly. Every quarter we see financials kind of ramp up with some money flowing into them. Then we see tech ramping up with money flowing into it, and then we see that money disperse out into other places. That doesn't mean that financials will pull back, and it doesn't mean big tech pulls back. It just means that the money flows. Money's always flowing in the markets, and that's how we get the cycles. That's how we get the price action. That's how we get the patterns that I follow all the time. So it's something to be cognizant and keep a watch on. We'll see money flowing into a lot of these banks, and we've already seen that. A lot of banks getting money flowing in and flowing into them, and then we'll see money leaving those banks and going other places. Doesn't mean that price will pull back. Price, any of these banks can report some spicy earnings and get some spicy results, and they can report some dismal earnings and get some dismal results. All right. We'll talk more about FHN here in a minute and some other ones, some other things that I've actually got 3 bonus trades today, just to tease that out there for you. All right. Now this is available in Discord in the Trader Talk channel. If you're in there, that's the open for all trading. It's pinned to the top of the channel. So back to it over here. So we've got the holiday today. Tomorrow, and not a lot. We get some Empire State Manufacturing. Wednesday, the whole week's just kind of not a lot of anything. We do get the core retail sales. That'll probably be a little bit of a spice here on Thursday morning in the pre-market. And then Friday, and we get some housing starts, building permits, FOMC member Waller speaking. And this one's the interesting one. This currency report right here. That typically comes out after the close. So we'll probably get that after the close on Friday. And that's usually an interesting report. It's not necessarily a big market mover, but I find it to be interesting because it kind of tells us how the Treasury's doing managing the currency, the U.S. currency, the U.S. dollar, and where they're borrowing, where they're creating money, where they're having trouble selling debt and financing everything. So that's it'll be an interesting report, I think. Then we're on to, gosh, this month's going away fast. Then we'll be into the last full week of the month, and then wrapping it up right there. So October's already gonna be gone. Then we have November and December left in this year. 2025 is slipping away. This is a time, like I said at the beginning of the month, this is a time to evaluate where you've been this year, how you're doing. We've got 2.5 months left to make our year look good for trading. All right. If you've been outperforming, let's protect that profit. Let's keep going. If you've been underperforming, if you're negative, let's figure out what we're doing wrong, what we've been, we'll reflect on this again at the end of the year, but this is the time put in place the fix. All right, like let's get aggressive on it. Let's fix it up. Don't just head in the sand and ride it out to the end of the year into a loss, and then reevaluate in December what we're going to do next year. Like a lot of people do it that way. I like to make sure my year looks pretty good this year. If you got excessive gains and you're carrying some losses, like playing your tax selling, like this is the time. Don't come down to December and be like, oh my gosh, I got like 5 days left to fix it. You're too late. All right. Now is the time to be focusing on this, not in December, despite what other mainstream media and YouTube might say. All right. So anyway, moving on. Back into it. Let's go up here. S&P, look at that move on Friday. Whew, baby. Almost to that extension target. And then NDX, I don't know where the S came from. NDX still hasn't gotten the breakout yet. Look at that. S&P was reaching for extension targets, yet NASDAQ is just stuck in the mud here. Stuck in the mud. Can't get out of its own way. Dang. I'll tell you what. Now, I saw another interesting statistic. Let's zoom out here. I don't know if I can get all the way out in this chart. Zoom out. So this bull market right here, this started right there. Right? I mean, we've had some humps and bumps along the way. You can say whatever you want to. We basically started at 666. Funny enough, like that's basically where we started. We may stop at 6,666. Right there. Wouldn't that be a trip? Add 6,000 points in a rip from that low to that high. Imagine that. How many people zoomed out and looked at that? And we can come all the way back down and test the top right there. So, yeah, hopefully big earnings next, starting, we have Netflix obviously starting this week, but big tech really coming in next week for a lot of them. If we can break it out, we're going to rally right up in there. So we've got what used to be called the Fangs. Now it's Mama Nat or the Magnificent Seven. We've got Meta. It's already up there. We've got Microsoft. It's been lagging down at the roadmap line. We've got Amazon. Well, looking pretty good. We had a roadmap set up over here, and we've just been sitting sideways. We've got Apple. Almost breaking out. Holy, we tried twice to get out of this and riding that downtrend of highs. Very similar to Bitcoin's chart. We can pop out of there. Target 243, possibly 250 up there. So that's Mama. And then we have NVIDIA. And it's got the setup to go up to 149, possibly 158 right there. And Alphabet is just kind of hanging. Sitting on the roadmap line. This looks a lot like Microsoft right there. Getting a lot of alerts. And then the T, Mama Nat, is right back down to the roadmap line. Pull my downtrend of highs over here. I mentioned we might go test it again. If we can hold above, that's very positive. If we crush down below, that's a real possibility right there. I don't want to see that. I am long Tesla and don't really want to see that deep retrace, but it is possible. So it's one of those things to keep in mind because that's like almost 100 points down to that target down here. Ugh. Don't want to think about that, but let's hold it and pop it here. We do have earnings coming up right there. Typically, 70% of the time, we drop on earnings, but I mean, there's no trend. Like if we're down into earnings, it can still drop. If we're up into earnings, it can still drop. If we're sideways into earnings, it can still drop. I've pulled all those scenarios and be like, well, what does the price action tell us? Tells us 70% of the time we drop our earnings, and it's a little more than 70. We'll talk about that more as we get closer here on the 23rd. But I would like to see this just lift off. Anyway, all right. That's been on the list for a few days now. Rolling back up to Russell. Didn't finish the head and shoulders pattern, so maybe that's a good sign. Of course, maybe it's a steeper angle here. Maybe I think the shoulder has to come up shy of the head to technically qualify. So if we hold it like that, possibly this could work out. But it's looking kind of sloppy now because when you do it that way, it looks like a head, shoulder. Meh, we'll see. We'll see. Oil still churning in this box. I found significant resistance at that roadmap line right there. You don't know what the roadmap line is. Like I said, click the channel name right down under me. Go watch the thing that's like my favorite indicator. Basically, I'm looking for a bounce off of it, either from the bottom or the top. This one's finding support. I mean, resistance. Resistance is above you. Support is below you. Finding resistance at that roadmap line right there. Resistance. But we're finding support. That's at this uptrend of lows. We kind of took a diversion down here, and then we came back above it, and now we're sitting there squeezing between the roadmap line, and so we've got the roadmap line as upside resistance, and we've got the uptrend of lows from back here. All these uptrend of lows as our support on the bottom. That 72.31 is an important level. As long as we can keep candle closes above it, we're slightly bullish inclined. If we get below it, probably going to make a lower low, and that lower low is probably going to be lower than this one back here from May of 23, about a year and a half ago. Probably going to go down lower than that right there. All right, that's what to keep an eye on for oil. GC. This is one interest. Like that rally on Friday was nice, but didn't take us back up to the top. Now this length of bar over here that I've drawn that says 16 bars, 22 days. That's how long we consolidated down here, right there, before we broke out. So we may get another couple days of consolidation before we can break out. Never does it exactly the same, so it could be faster, it could be slower, but that would be an echo of that consolidation. Bitcoin, look at that. Look at that. Nice strong day on Friday, and it turned spicy sometime last night. I started getting alerts. Look at this. There's the spot market. We've got the downtrend of highs coming across here, and we need to break through it. I was saying on, I think it was on Friday, if we break above this high right there, which we're kind of above, we would come down, test the downtrend of highs. If we can get through that, we are set to get some higher price action. Finally break out, finally maybe tip the odds. We're going higher. So it's one to keep an eye on. If we can get, this could turn really spicy really quickly. All right. Now, if we reject it today, that's going to be a big bummer. And then this becomes the support right here. If we break that, probably going on down. Maybe make a lower low than we made back in August. Something to keep an eye on. Not sure we're done with the consolidation yet. Although I did say late October was likely to be the point at which we confirm we have a bottom in place. And then we start rallying. And it could be sometime in November when we really start breaking new highs. And then we're probably not looking back. That's the way Bitcoin crumbles. All right. That's the way the Bitcoin crumbles. So Ethereum here, firmly rejecting the head and shoulders pattern it had in place. I'd like to, if we close above that shoulder, likely we're going right up here to test the roadmap line. Roadmap line right there. Get above that, probably heading for the target right there. Simple as that. Dollar really testing into this daily roadmap line. I do expect this to take another trip down. Japanese futures trying to break those highs. We've been really firm at it. Hadn't triggered my alert yet. It's right there at the line. If we can push through, this one's probably heading up here to 44,000. And if Japan does this, we in the United States stock market probably do this too. So if they start breaking out, we'll probably start breaking out, and that's the kind of climb right there. So we're looking at mid-November, possible top out right there, and it could go for extensions. So we already briefly talked about Tesla, LBPH, Longboard Pharmaceuticals. Nice pop. I'm not keen on playing biotech pharma. Just not my bag, baby. A lot of times this stuff does unpredictable things. Like this stuff being biotech and pharma. Anything the Food and Drug Administration in the United States gets involved in. So that's one of the 4 things that doesn't commonly follow the patterns. Just because anytime the FDA suddenly, it's like the government gets involved and just changes the game. So that's one of those things that very difficult to apply my patterns on pharmaceuticals. China stuff, because they play a different game. Even though they're listed in the U.S. market, they don't have the same accounting rules that U.S. companies do. And shocking, surprising information just sometimes comes out. And things happen. So China stuff is another one that commonly breaks patterns, especially the smaller cap China stuff. The bigger cap stuff like Baba and Baidu tends to be okay, but the smaller cap stuff. Number 3, leverage stuff. All right, and number 4 is low price stuff, and that's stocks under 10 bucks. So MSTR is pushing out to the target. Beautiful, beautiful dreamer, come back to me. Let's hit those targets. And all right, cool. Thanks, Netflix. I think this hit the target. Yep, there it is at the target. 220, 240 above that, and 300 above that. And this thing could get super spicy. Now, this is interesting because it's trading like leverage Bitcoin, maybe even a little extra spicy leverage Bitcoin, but it's not leverage Bitcoin. Like they don't have any leverage on Bitcoin, but they did announce that they plan on creating some sort of Bitcoin bank situation. I don't know. Their MSTR is a technology. I mean, they're internet software services. You go look at their website and they don't do anything with Bitcoin, but they do hold, they do sell a crap ton of debt, use that debt to buy Bitcoins. And they keep doing that over and over. Use all their profits to buy Bitcoins, use all their net operating profit to buy more and more Bitcoins and hold it on their balance sheet. And I guess that's working out for them. So we completed that pattern. Protect your profits. Be careful. The next expected move would be another return to the roadmap line right back there. That played out. This has been a pattern we've been following since back in March. We got that correction down into May. Then we thought we were going to break out. Nope. Retraced. Had the split in there. And now here we are at the target. Right there. Finally took April, May, June, July, August, September, October. It took 7 months on that one. So if anybody wrote it, great job. Protect your profit. That would be the next expected move. Now, it doesn't have to do that if we can get some extensions. Right there you go. It's kind of breaking the mold. Not really following along with Bitcoin right now. So FLUT at hit the target and probably going to retrace. So, I mean, here's simplified up here. That was the move. There was the entry. Right here was the entry. Shot up. Well, you could have gotten it back here too. Shot up to the targets. And retraces next. There you go. That's FLUT. MSTU. This is T-Rex 2x long on MSTR. So if you want to, if you're late to the party on MSTR, here's your leverage way to play. I would be very, very, very careful. But this is going from 25 right back here all the way to 65. Absolute crazy. Absolute crazy. FNGU breaking out. This is set the stage. If we close today above this orange gap down zone, 627 is likely the upside target. Lots of interesting things here this morning. Things are indicating we may get a massive move up in the market. Coin still hasn't broken above that roadmap line yet. Still hasn't broken above that roadmap line. MSTX. There's another leveraged MSTR play right there. How far can they go? This one started trading a little before the other one. Next upside targets on this would be 52 and 63. But remember what I said, one of those four things, leverage. Leverage stuff. Things that have leverage on them don't always hit the targets in the proper way. Sometimes they go extra. Sometimes they come up short. Sometimes they don't tell the full story. Be careful trading leverage. CEG, leverage cuts both ways too. So you get leverage long, and especially if you go with options, that's a dangerous game. I mean, that's basically like covering yourself in gasoline and playing in a playing with matches in a nitroglycerin factory, like, while dump trucks are rolling through. I mean, that can end you and your account pretty quickly, playing with options on leverage. So be careful. CEG right up into the targets. The next extension target 300, possibly 391 above that. But after hitting targets, a retrace highly anticipated for my system. So we may come back down to this zone and retest the breakout before we can get the next move up. VST, this one's been rocking and rolling up at the targets, and I would expect it to retrace just the same, although that looks like 1, 2, 3, 4, and we may get an extension up to 189. VERB is a dumpster fire. That's a reverse split, 1 for 200. You may be like, oh, look at that. This has dropped from 6,000 here just a little bit ago down to 14. What a great upside opportunity. Okay, look, there's a reverse split right over here. I missed it right there. 40 for 1. There's another one right here. 200 for 1. That means there's a multiplier of 8,000. 8,000 on this thing. So it was never 6,000. It was never 8,000. All right. It's got a multiplier on it because of the reverse split. That means if you had 8,000 shares over here, when it was up here, now you've got 1 after this split down here. After these two splits, you went from 8,000 shares to 1 share. That's a dumpster fire of a chart. Be careful right there. I wouldn't touch that one. Any of your money. I wouldn't even touch it. Like, you were like, hey, here's $15. Go buy me a share. I'd do something else with that money. KB. Right up to the target. I mean, right up in the target zone. Looks like we're going to push out to that 68.91, possibly 70. That would be the actual target. This is a 4-hour chart. Bounce right here. And there's the target, right? I mean, yeah, we're right there, 70. Yeah, I thought that was right. Yeah, we're right in the target zone. That's what I thought. Watch out for the retrace. Could make it up to 74. That's it. And ESTC. Go back up to the daily chart. And the resistance is right there, right there. Upside resistance, downside support and target. Came up a little bit shy. We got really close, right to the top of the target zone there. So why? Maybe like, why did you expect to move like that? So the one pattern, like the video I said, the roadmap pattern, that came up, but we rejected into resistance here. And when we do that, let's just clear some stuff off. We do what's called a measured bounce pattern when we reject that going higher. And that's the classic target for it right there. We got right into, we basically touched the classic target. So this can be a reversal now off of this. And the thing to watch, that high, this low. Gonna have to break back above. Let's just clean this one off so it's not in the way. Gonna have to break back above this zone right in here where we gap down from. So that gap down resistance comes all the way down. We've got a major resistance all the way up to that gap. And then we've got to break this prior high on top of all that to be able to go higher. So that 618 would be kind of the activation zone for a new trade. While it's looking pretty good and spicy here today, there's a lot of upside resistance to go to really get this one going to 148. So be careful. It loses money. That number right there. A negative number on the earnings. I liked how it disappeared. Negative 48 on a standardized. Think about it. They're cooking the books. Yeah, we report 35. Estimate was 25. But when we actually do standardized, generally accepted accounting practices, we lost 50 cents a share. Okay, wait a minute. That's some funny business going on right there. I don't like trading that stuff. Like, I want things to have these two numbers to be the same and reported and the standardized. NVDU popping here. Can we take it out? 170, 190 would be the upside on NVDU. USD, this one almost to the breakout zone. We had that gap down over here. If we can get above it, looks like we're heading up to 190. COHR at targets. Watch out for resistance. Of course, we could extend it. 139, 160. BLCO. Bosch and Lom. Let's see what we get. That high, this low. We're set for a rally up to this 2350, possibly 25 area. VRT. Nice roadmap bounce. Target 118, 127, just above that. We're almost to the target. Very classic bounce pattern right there. Very classic. And this may hit here, retrace, and then pull the extension up to 154. Cold, natural gas. Let's go look at natural gas. Usually do that on Tuesdays during 30 minutes of awesome. Oh, pulling back to the roadmap line. Failed to break out. It's going to do a roadmap line test, more than likely. Come down here. If we can hold it, turn up, maybe break out. That target is still up there at... Dadgummit, I moved the alert. That target's still up there about 4. And on log move. At 360 and 4. All right, decliners, stuff that was dropping today. Cat, we hit the target. Probably going to come back to the roadmap line. App, golly. Way extension targets. That's probably going to retrace. I mean, it can keep extending. We'll get 170, 189 above that, but watch out. The higher this goes, and the higher and more vertical this goes, the more it's likely to do this. Amgen, potential working on a bounce here. Got to the target last time we did a bounce. This is going to be a 4-hour bounce, not a daily chart bounce. 4-hour bounce, 4-hour bounce, double bounce, and 352, 357 up there. PDD, still expect this to go up to 175. It is set the stage. We did the retrace to the classic, you know, this same as the pattern I was talking about earlier. We did the classic bounce bottom thing, moved up. We may retest the roadmap line. We see that plenty enough, or we retest to gain the energy to go up to the target. So we did fire off the entry right back here on the 26th. Looks good. Looks good. It may take more time than you think, but NTES probably rejecting that downtrend of highs and maybe gonna get a move on down into this 57 to 60 area down there. FUTU, that was a crazy vertical climb, consolidating here. Now this concerns me. All right, this move right here, a consolidation in here, and a potential breakdown below this low right there can bring this all the way back down right in here. Now, if you're new here and you've never seen this pattern before, this is called the bubble pattern, or at least I call it the bubble pattern. You can go Google psychology of a market cycle, and this is what you see. This excitement right here into a vertical climb, this consolidation over here, and then when we break down, oh, we come all the way back down. See this on hundreds and hundreds of charts over and over and over. Some of the most classic moves, GME, Tilray, all this kind of move. And humans do this pattern subconsciously. They're like, oh, you know, they are about to rip everybody. You hear this common, like they as in there's some all-knowing, super powerful trader out there that's gonna rip everybody. They are just us, all right? Just, it's human psychology. We do this, we get the euphoria, then there's complacency, and then people get tired of waiting for the next breakout and they start selling, and then it drops it back down here. It's just human herd mentality. That right there can do that. Be careful. Be careful. Be careful. All right, good job, Don. I'm just sitting here talking away and you're making money. All right, Boeing. Potential support right down here at 145. 135 below that. Kind of want to see this hold. If we start getting much below 145, we could wreck this whole pattern and go make a lower low down at 92. So this is getting to be an important zone in here. If we start breaking below this zone right in here, I might accept something down to 135. But if we get below that, probably looking like this. I've been hopeful that we were going to form a support and get out of here. Now it's looking like we might go deeper. 92 right there. If we start getting below, I'm going to start marking some stuff up here. This would be the line in the sand. We get below that. Watch out for this. I know Goose, that is not a chart you wanted to see me draw right here. But we're not holding the support. We're not finding the support we need right there. So, you know, layoffs are bullish, but that's not popping. So, maybe like, wait, layoffs are bullish? Yeah, that's the fastest way to reduce your costs. Now, long term, it's not great, but it's the fastest way to vastly improve your costs. So, typically, a big layoff is bullish, but if layoffs are bearish, that means there's bigger systemic problems. We may see this right down here. Now, what's funny is I drew this chart and this retrace and this big blue arrow before the first door flew off the first airplane on Boeing. We were up here in December of 23. I warned that that was probably the top, and I drew a big blue arrow, and my target was right down here at like 157. 157, 160 area, right in there where I drew that little box. And now we've started pushing below it, so it's time to get cautious. All right, we start breaking further supports, and Right there you go. There you go. That's you can say they need to do lots of stuff, but hey. Baidu broke through the downtrend, retesting. If we can find support here, I told you we would retrace the roadmap line. Look at that right there. If we can hold that, turn back higher, this can turn into something bullish. Right there, the next upside will be 118, 120, possibly 127, and we'll probably do another retrace, but we do have a significant resistance to work through right in that zone where we topped out. CWeb doing that bubble weave pattern. We're kind of holding on to this high pretty well. It may dip down, but it could hold here and go again. Could hold here. Could hold this zone and go for another rip. So I'm not really betting against. This is leverage stuff though, so be careful. Anything I say about leverage. Baba, that, gosh, it's starting to look a lot like that bubble pattern, right? We consolidate in here, break down, could come back down right in here. Back to 88 area. Just be cautious on those. All right, bonus trades. Bonus trades, bonus trades. So here's the first one. FHN, First Horizon. This, funny enough, this used to be called First Tennessee First Tennessee Bank. Tennessee Bank. So First Horizon, 1704 is the target, 1382 is the stop. Upside potential, only 66 cents here. 85% historical win rate, 1.78 right there. 40 trades since 1972. And Sledge, I know you love those ones that have worked and worked for a long time. So here you go. Not a large upside, but like I said, so we've got that high, we've got this low right there. Actually, we could go a little bigger, I guess, on the target. I get the click the right target. And it looks like there's the lower target, and then if you go off the bigger move back here, could go a little spicier up to about 18 right there. Next up, number 2 on the list, SNPS. Now this one's a much higher flyer here. We're talking 604.22 is the target, 456 is the stop. Whew, that's a big range. We're also looking for 64 points of upside on this baby. 77%. Look at this, 35 trades since 1992. Another really spicy one. Look at the profit factor right here. This number has been more indicative of awesome ones. When we get profit factors over 2, especially the bigger profit factors, the bigger the profit factor, the more these have tended to work better. So while the historical win rate on a statistical population is strong, a very strong profit factor right here. This is all the same pattern on all these tickers. Same roadmap bounce pattern. So this one right here, there's your high, there's your low, here's the break above the 618, and the target right up there at 604.22. So popping over the charts, SNPS. Well, I already had one drawn on here, funny enough. So just zoom this up just a little bit. We're looking at this current high, this current low, and that 604. So you don't even have to make a new high to get to that target, 604. And this could do the bigger pattern from back here up to 653. So multiple layers of potential upside on that one. Looking pretty strong. I like it. 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 All right, next up, TRNS. Kind of in the middle, right? We have one that's kind of small, one's kind of big, and now we get this one. Maybe this is just right for you. You can make your own decision. 136.57, 113 is the stop. $10 upside right there. 34 trades since 1972. Another big statistical population. Another bang-in profit factor over 2. 82.35% win rate on that 34 trades. We're looking pretty good. Now, I also have the average duration on all of these. So, looking at TRNS, Looking at it on the chart, I do have an automated tool that finds these. So we're talking about this potential move just right here inside the bigger potential move. So 136, right there's the upside. Now, looking at the bigger potential pattern, this is just an inside move so far. The bigger pattern could take us out to 154 up there. And we haven't actually activated that, but when we get up here to 135, we will activate that 154 target on the bigger picture right there. Approximate time frame is all given right there. It's 67 trading days. That's trading days, not calendar days, and that's an average. So the way averages work, it could last 2 times, it could last 3 times the average. So I commonly go for all of these daily chart patterns 5 months at least. 5 months is just the typical expectation for me on how long they last. You know, having traded the market roadmap pattern on a daily chart for years now, 3 to 5 months, typical expectation. And if you don't want to run out of time, if you're trying to buy options, 6 to 12 months would be a good place to go shopping. I'm not saying they're affordable. I'm not saying they're out there. So there you go. All right. And bias for the day. Let's go circle back, hit the bias for the day. Remember, if anything I said was helpful, beneficial, give me a thumbs up, like on the video, share with a friend, phone a friend, and look at that, pushing on up. I think we're going to extend on out here, baby. Extend on out. So we're hitting the targets on ES. Next big major upside is 6,000. And we could be on the path for that right here. And then we may top out right up here, where all those fib lines come together at 63. But like I said earlier, wouldn't it be funny if we topped out? We started at 666 on the rally, and we end at 6,666 for this bull market. Not that far. Just right up here. Not that far away. We could blow off top of this baby and burn it down. NASDAQ, I'm hoping for the breakouts. That's the bigger one. I'm watching right there. Looking for this 21.4. Get out there. Let's do it. Let's do it. That's the way we do it. All right. Thanks for coming, everybody. I will be back with you tomorrow. Same bad time, same bad channel, 9:15 in the morning. And thanks for coming. Thanks for watching. Thanks for supporting me. I'll see you again tomorrow.